Do you agree with Bill Gross, a 3% GDP? Is there truly a shift away from what we've seen the last 5 years?
Oh, well, it certainly would be. And obviously the economy has some momentum from housing, from QE. Obviously, on the other hand, obviously, there's a fiscal headwind. But obviously, this could be the best year for the U.S. economy in what's been a really weak recovery thus far.
Right now in the U.S., your colleague Bill Gross said 3% GDP. We had a comment of 4% GDP from Mark Zandi. Out a year and a half. Are you ready to call all clear on our economic crisis?
No, I don't think you want to say that. Obviously, we're in a much better situation now, I think, globally. And obviously, the U.S. economy is weathering the fiscal cliff. It looks like Q1 will print north of 2%. It looks like the housing rebound is for real. The consumer is holding up. Capital spending, I think, will be a positive. So again, but we have to put this in context. There's still a very high rate of unemployment. There's still a huge output gap. So 3% growth is nothing to brag about given the hole that we fell into with the Great Recession.
We have so much to talk about. And we really want to come back and also talk about the job linkage, where we'll see great claims today. Which nation are you focused on? What matters right now in Europe?
Well, I think you begin with Italy, because they had a very inconclusive election. The markets, I think, have absorbed that actually reasonably well. Italian credit spreads have widened, but spreads in the rest of Europe have not. Indeed, Spain has had some very good success. Recently, had the news yesterday on Ireland. But we're focused, and as we should be, on Italy, because obviously if that does become a train wreck, then that's obviously of concern.
And this is the train wreck. Sarah brought this up. Sarah, jump in here on Italy, but here's the Italian stock market, and it just hasn't happened.
No, the Italian stock market has been lagging behind stocks in Europe, which are at the highest level in years, as they grapple today with this question over whether austerity is working. Is it?
That's an excellent point. I want to address that, because this sounds like in the weeds. It's actually quite important. What they're discussing in Europe is how you evaluate if a country's on the right track. And what they're saying is that we're going to focus on the structural budget, not the observed budget, because to the extent your deficit is wide because your economy is weak, you don't want to add on even more austerity. So I think it makes sense. It makes sense to look at structural balances and not observed balances. And if they do that right, I think that's an important point to sort of get people away from the austerity concern.
Well, certainly there are economic ramifications, but look at the political backlash. The Italians rejecting austerity. Is this a preview of what else is to come?
Well, I guess the short answer is that we don't know. But at least to date, the turmoil in Italy's politics has not really spilled over more broadly to Europe. And I think that's a positive sign. 2 or 3 years ago, it almost certainly would have. And I think the ECB under Draghi deserves credit for chopping off that left tail risk.
There is a German election this year.
Yeah, there's a German election. I was going to go there in the sense that we saw the drama yesterday from Rome. There is something about being European. We forget as Americans how big the aggregate economy is. And if Germany's the one that drives the economy, is it safe to say they're on a path to recession?
Well, the German economy has been suffering, as has the rest of Europe. Obviously, the German economy probably will come out of the downturn before the rest of Europe. But yeah, Germany cannot thrive with a moribund Europe. I mean, yeah, Germany's an export powerhouse to the world, but Germany needs a healthy Europe to be a healthy economy. Because they know that.
I mean, nominal GDP, how do you go into an election with nominal GDP rolling over like that? Germany's got to act, don't they?
Well, I think so. But I think that from everything that we observe, Merkel has a lot of support. I don't think there's really any doubt that she will prevail, although the details and the contours of the coalition will be up in play. But I think Merkel will prevail. I don't think there's any serious chance that that doesn't happen.
We've started to see the euro weaken materially below that 130. Is this what's going to save them and help get out of recession?
Well, and it's an interesting point, because politicians don't want to be accused of talking down their currency, but in fact, Europe is better off with a currency of 125 than it is at 135 or 140, and they know that. And
let's look at the flip side, though. The U.S. dollar is strengthening as the U.S. is a bright spot in the global economy right now. Is that going to start to hurt our businesses, our multinational corporations?
Well, again, if it were to continue for some time, possibly. But again, we're within a pretty tight range on the dollar now. We look at the recent move in the DXY, but if you get that chart up, you'll see it's been in a pretty tight range for 3 or 4 years. So I don't think that's yet a concern.
We have been sequestration-free today.
Good.
How much of a drag do you put on this foolishness in Washington?
Well, I think the important point to note is our outlook and the Fed's and most people basically assumes we get a full sequestration, which, remember, is not $85 billion. It's around $40 or $45 billion, which in a $16 trillion economy is manageable. But I think that's been factored in, and that's why most forecasters see growth in the twos, because they're factoring in the drag from the December negotiations and the sequester.
Very good. Richard Clarida, thank you so much.